तो आगे बढ़ते हैं यूनिट नंबर 14, ठीक है। सो यूनिट नंबर 14 विच इज ऑल अबाउट योर मार्केट रिस्क, ठीक है। यूनिट नंबर 14 मार्केट रिस्क. सो इट इंक्लूड बेसिक मार्केट रिस्क कॉन्सेप्ट, मार्केट रिस्क इन बैंक, management framework. Now see, organization, identification, measurement, risk monitoring, control, risk reporting, managing trading portfolio and all. So now there are some things which will start getting repeated, ठीक है। तो कुछ चीजें आपकी होंगी जिसमें आपको क्या देखेंगे, बार बार आपका क्या हो रही है, रिपीट हो रही है, ठीक है। सो with every form of risk you'll see these kind of guidelines and all, and they'll start getting repeated. So market risk is something, there are some adverse movement in the market, and due to these adverse movements, our portfolios, our market portfolios are getting affected in a adverse manner. That means they are hurting our profitability, okay? So we are, due to those particular one, we are making some sort of losses. So market risk is the adverse deviation of mark to market value, the trading portfolio due to market movements during the period required to liquidate the transactions. The period of liquidation is critical to assess such as adverse in such adverse deviations. If the period of liquidation of the position get longer, the possibility of larger adverse deviations from the current market value that will आपका increases. So see, let's say we have some portfolio. Let's say we have XYZ company shares, ठीक है. So let's say we have XYZ companies shares in our portfolio, and we have, let's say, worth rupees 100 crores, ठीक है. 100 crore rupees worth value, we have XYZ company shares in our proprietary position. That means our bank owns this particular shares in this XYZ company, and that means we are bullish about this particular company. We have some sort of long-term perspective around this, कि this company shares will go up and all, or else it can be a conversion of debt into equity also. That company have taken loan from us, but they won't be able to make that particular payment, so we have converted those particular one into that debt into equity. Now or in simple terms, let's say we have some positive outcome from this particular one, this company shares will go up, okay? Now there is some adverse movement, means we are bullish about this particular security, but the prices of this company shares are coming down, okay? So coming down, let's say our position was at 500 that time aapka, when we buy these particular shares. Now the share prices came down to 450, and there is a probability that the prices will come up to 300, okay? So there are some predictions in the market itself due to fundamental change in this XYZ company. Now we have two options, okay? In this situation we can face two areas. Basically what we are facing liquidity risk. One is कि we won't be able to liquidate our position at the fair market prices. One option what we have, we can sell off at 450 and we can exit, and we can make a loss of 50 rupees per share from this particular company. Or sometime these movements are something like this, as SBI faced in case of Kingfisher Airlines, okay? So we do have Kingfisher Airlines shares, but the problem is the prices was 147. Now directly it came to 10 rupees. There is no one to buy these particular shares. There are only sellers in the market when that scam came out, right? So this one situation, it is partially illiquid. We are not getting the fair prices in the market. Another one is completely illiquid. We won't be able to sell our shares because there is no buyers in the market itself, okay? So sometimes these adverse movements, which generally make the negative impact on our portfolios and all, so they generally comes under this one. So bank also have several activities and undertaken transactions that result in market exposures. They are not immune to those risks and have to face them too. All such transactions are reflected in this trading books. It can be debt securities, equity, foreign exchange, commodities or derivative. Commodities are not allowed in case of India, not permitted in our country presently. Okay? Please do remember this one. Okay? But mostly we have around the position in these particular securities, so they are subject to M2M, and that M2M can come down at a level of zero itself. ठीक है, कई बार ऐसा हो सकता है कि जहाँ पे you have bullish trend about that particular one, but there are some different situation in the market and their prices are coming down, completely coming down. So trading book, it is, see, market risk is all around your trading book. So that's why we are studying this one. So trading book also include position in financial instruments arising from mismatch principal broking and market makings, or positions taken in order to hedge their elements of trading books. The proprietary position are held with trading intent and with the intent of benefiting in short term from actual or expected differences. So differences between buying and selling prices or hedging other elements in the trading book also. A bank trading book exposure has the following risk which arise due to adverse changes in market variables such as interest rate, currency, commodity, market liquidity, and other volatility as impact the bank earnings and capital adversely. Majorly आपका these are the areas. One is liquidity risk, another one is आपका credit or counterparty risk. Credit and counterparty risk is something. Liquidity risk आपका, as I gave you an example of that XYZ company. So it can have a partially liquid or it can be fully illiquid. Credit or counterparty risk is something, let's say we have some position in derivatives. Okay, so let's say we have some position in swaps or forwards, and in that case, if that another party they defaulted and they do not fulfill their promises and all, so that is something related to your credit or counterparty risk. Okay? So trading liquidity is ability to freely transit this, and the risk is basically trading liquidity risk. So adverse change in market prices, inability to liquidate position at a fair market price, and the another one is large changes caused by the liquidation of position, inability to liquidate position at any price. There can be these kind of situation. Adverse movement, one is like we won't be able to liquidate our portfolios at fair market prices, partial illiquid, and another is आपका inability to liquidate position at any price, as I gave you an example of Kingfisher Airlines also. So these are the areas which generally comes under this one. So credit and counterparty risk, market value of credit risk, credit of users or borrowers, that is reflect in prices. Credit risk is a credit risk of traded debts such as bond and debentures and commercial papers indicated by the credit ratings given by the rating. Credit rating indices the risk label associated with the instruments is forced into add-ons to the risk-free rate, and this. The lower risk labels, the lower the spread over the risk-free rates and all. Credit risk आपका, that basically it is आपका something related to tradable securities, or mostly it include in derivatives or some sort of आपका जैसे debt, bonds and others. These are generally categorized under this particular one. Derivatives also should have mentioned here also somewhere. Okay. Then आपका risk management framework, again when it comes to the risk management framework, for we have risk identification, what type of market risk we are going to face in the near future or in our portfolios at portfolio level or as the transaction level. Risk measurement, what is the overall value or the quantifying that those risks, how much loss we will face if we make those particular positions. Monitoring and control आपका the processes or the model which we have developed, so where we have VAR and all, and risk mitigation आपका so when actually those situation occurs, how we are going to has those particular position or how we are going to execute our existing plans and all. Organizational structure, again same thing आपका. So board of directors, risk management committee, we have ALCO, asset liability management committee, ALM support groups, and आपका middle office. So see, the same one. The only thing is we have eliminated आपका operational risk management or the other groups. Board of directors, they have eventual responsibility for any sort of market losses, market risk, any losses due to the market risk. Risk management committee for the overall bank level risk management. So they generally weightify the different risk from the different portfolios, including marketing risk. ALCO आपका asset liability related. Then we have ALM support and we have middle office here. So there is something missing in this one. Organizational structure, board, setting the market segments and all thing. Okay. Asset live. Okay. First one, this is a risk management committee, board level. So responsibility of risk management committee in managing your market risk. So setting guidelines for market risk management and reporting, ensuring that market risk management process conform to a policy, setting up prudential limits and their periodical reviews, ensuring robustness of measurements of the risk model itself. Role of ELCO in market risk management committee. So the role encompass the following things: product pricing for the deposit and advances, maturity profile and mix of incremental asset liability, articulating interest rate view of the banks, funding policy, transfer policy, balance sheet management. They generally comes under this one. Risk identification. Damn. So risk identification. Now this is something new aapka. I guess we'll get something new from this one. Role of different committees will be asked. See, Pujisa ma'am, na, in some cases they ask like role of it can be something around ki role of risk management committee during management of credit risk or aapka management of operational risk. So this kind of thing. So they have given, if you'll open your book also na, so they have segregated, mentioned these particular overall structure, and if you'll go for one time also na, you will be able to memorize those particular. There is nothing new. If you'll study for one risk very well, if you understand that particular risk and others very well, the role and responsibilities are similar. Like even for board of directors, with every type of risk, you'll see they have mentioned that board of directors are eventually responsible for overall management of market risk, or another in case of liquidity risk, they have mentioned liquidity risk, or even the other ones. Okay? Everything which is part of the risk management policy or procedures exposure, they are part of the board approval policy. So that's why the accountability belongs to the board itself. So risk identification, all product and transactions should be analyzed for risk associated with them. While various risk associated with the standard products means aapka, these are already tested product in the market. Like so we are selling those particular product, or we are entering in those particular product from years aapka, okay? So that is your standard product. The risk in case of non-standard product need to be analyzed. Non-standard product is something we are coming with some new product, or we are entering in a new product for the very first time. That is your non-standard product. So in case of standard product, we know like what is the risk inherent, or how much risk we can have in those particular one based on the past experiences and all. But in case of a new product, there is like uncertainty, so we have to analyze and monitor that particular one very well, right? So usually standard product would have product programs. They have already product programs, means everything's about the journey, risk, return, capital, everything is there for each of them. All risk taking units operate within the approved product program itself. Okay? Product program is something aapka, this is that trinity aapka, okay? How much capital will be required, what is the risk level, and what is the return levels and all. So we have exposure limits aapka deal wise or others wise, whatever it is, and we have the these products are already tested in the market. We have entered in those particular so many times, so we know as a bank wise we have policies while we entering in those kind of contracts or those kind of products. But for the new things, there are lots of uncertainties, so that's why we have to be very careful. We have to test them again and again, then we have to convert them into the we have to build a product program for these new product as well. So product program define procedures, limit, control for all aspect of the product. The product program also specifies market risk measurement at individual product level and aggregate portfolio level. New product or non-standard products may operate under product transition memorandum. So product transaction memorandum on a temporary basis, while a full market risk product program is being prepared. So initially we generally run the new product at product transaction memorandum. So once we experience everything, then we ship them to the आपका प्रोडक्ट, वी जनरली डेवलप अ प्रोडक्ट प्रोग्राम फॉर दोज न्यू प्रोडक्ट ऑल्सो, राइट. रिस्क मेजरमेंट आपका, सो फॉर मार्केट रिस्क वी हैव सेंसिटिविटी एंड डाउनसाइड पोटेंशियल, ठीक है. सो सेंसिटिविटी इज समथिंग लाइक it generally tell us about the upside and downside, ठीक है. It is something कि it is about how one variables is basically like we have volatility, sensitivity and downside potential, ठीक है. So when it comes to the sensitivity, it is like Sensex, ठीक है. So like let's say the आपका Sensex, if you comes to Sensex, we have how many 30 companies आपका, ठीक है. So we have 30 companies like Reliance, TCS and all these are part of this particular one, and every company they have some sort of weightage. Let's say 9% to Reliance, आपका 7% to TCS or the other one, ठीक है. So we have 100. So now let's say if sensitivity is something, the Sensex value is generally changing according to these elements, ठीक है, these different elements. Like let's say there is a movement in Reliance of 10% up, ठीक है, the Reliance share price goes 10% up. So with this weight आपका the 9% weight which is belongs to the Reliance in this entire आपका group of companies or the bucket which we have created, ठीक है. So it will affect positively 9% upside to this particular one, correct है. ऐसे ही we have given a weightage to TCS. So there are, like if you'll see the Sensex, there are 30 companies. Let's say 25 companies they perform well during that particular trading period, and there are 2-3 companies they were perform आपका at the level. So the overall weightage is आपका at higher side, so they are moving. So this is something here also. Sensitivity आपका, what are the variables who all are going to affect our market portfolio, ठीक है. So for a profitability variables or loss variables, there are, let's say we have invested in a XYZ company shares, and there are, these are the variables who all are going to affect that XYZ company shares or that USD INR आपका currency pair. So if those variables, how those variables are reacting, अगर उनमें let's say if there is a 5% change in that variable X, how much it is making an impact on our security. So that is the sensitivity. They can have, while we do the sensitivity or volatility analysis, it can have upside and downside outcomes, ठीक है. तो हो सकता है अगर आपकी sensitivity में positive side है, it can lead to the upper side. If it is आपका there is negative variables are more, it will lead to the downside. The another one is downside potential. This we assume one of the best method to account the market risk. Reason being, it generally shows us around the like it generally use sensitivity and volatility as a parameter, but they are negative areas आपका कि sensitivity wise there is a negative, like जैसे upside इतना जा सकता है, downside इतना जा सकता है. So we are accounting that downside वाला. Volatility wise आपका upside it can go this way और downside it can go this way. तो volatility का भी downside, and by using these two downside and all we are creating आपका downside potential कि in next trading day or in next month or 90 days or 1 year, what can, like how much loss we can made from this particular portfolio, or what can be the adverse impact on this particular portfolio, that we generally get to know through the downside potentials and all. So इसलिए सबसे ज़्यादा आपका यूज किया जाता है. So sensitivity, as had been stated, deviation of the market prices due to unit movement of a single market parameters. Like in case of Sensex, single element is TCS, Reliance or the other companies. These are the elements. How these elements are moving. तो अगर TCS में मूव हो रहा है अप 10% का, तो उससे सेंसेक्स पे कितना वैल्यू इफेक्ट पड़ रहा है अपसाइड में, ठीक है. अगर TCS इज कमिंग 10% डाउन, सो इसका इंपैक्ट कितना हो रहा है आपका सेंसेक्स के ऊपर, ठीक है. सप्लाई डिमांड पोजीशन, इंटरेस्ट रेट, मार्केट वॉलेटिलिटी, इन्फ्लेशन, एक्सचेंज रेट, स्टॉक प्राइसेस, these are the variables in case of market risk, ठीक है. So market portfolio is depend on these particular things. If these will be in favor, so your portfolio will go up. देखो अब यहाँ पे how this interest rate is impacting our portfolio, how this आपका exchange rate is impacting our portfolio, that is we generally do with the help of sensitivity analysis. Downside potential, risk materialize only when earning deviate adversely. Downside potential capture the possible losses only, ठीक है. It does not talk around the positive side. It only talk around the negative side आपका. And ignore the profit potential. Downside risk is most comprehensive measure of risk as integrate sensitivity and volatility. ठीक है? Sensitivity and volatility with adverse effect of uncertainty. This is the measure that is most relied upon by banking and financial services industry to use and also used by the regulators. ठीक है? So we are like basically what we are doing, we are trying to protect us. तो प्रोटेक्शन के लिए वी आर चेकिंग द एडवर्स लाइक वर्स्ट केस सिनेरियो. ठीक है, क्या आपका ज्यादा से ज्यादा डाउनफॉल क्या हो सकते हैं, एंड वी आर प्रोटेक्टिंग आवर बैंक फॉर दैट पर्टिकुलर रिस्क मॉनिटरिंग एंड कंट्रोल, policy guidelines limiting role and authority, structures and all. Please go through this one. System and procedures for unbundled product transaction to capture the all risk, guidelines on portfolio size and mix, this and all. Okay? These are the areas which we generally cover through the risk monitoring and control. Okay? So basically, while we are framing our policies or models to control market risk, we are generally considering, we have to consider these many areas. Okay? Chalo. So first one, guys, Mr. X with a capital of 10,000 decide to invest in shares of ABC Limited, quoted 100 rupees each. That means 10,000, 100 shares. Okay, he buy 100 shares. Later, using a leverage facility of 9x means 90,000 and purchase and additional 900 shares. The share price adversely, the share price dropped by 5% in the next day. Okay? Which of the following statements are correct regarding the risk and consequences faced by the Mr. X? So, what will be your correct answer, guys? Tell me. क्या होगा करेक्ट आंसर इसका? So Mr. X capital erosion is limited to 500 rupees since that was his original investment. Leverage magnified Mr. X lost 50% of his initial capital due to the 5% price drop. A further decline in the share price can lead to forced liquidation of holding to comply with the permissible leverage norms. Yes. Asset liquidity risk refer to the situation where Mr. X cannot sell ABC limited shares easily due to lack of buyers. Market liquidity risk arise when X cannot sell his holding at a fair price due to overall market liquidity. A proper risk management framework would have alerted Mr. X to the potential downside before entering in this market. What will be a right answer, guys? रुक्मणी मैम इज सेइंग ऑप्शन ए. बाकी की जनता क्या कहती है हमारी? सो तो नहीं गए ना, ठीक है, अभी से सोना नहीं है यार. चलो एक यूनिट और करते हैं, 14 आपका. ठीक है, सो फर्स्ट स्टेटमेंट, मिस्टर एक्स कैपिटल इरोजन इज लिमिटेड टू 500. दिस इज कंप्लीटली रॉन्ग. व्हाई दिस इज रॉन्ग? ठीक है, देखो, he invested 10,000 rupees, ठीक है, and he buy 100 shares at the rate of 100 rupees. ठीक है, so आपका first of all like now that 100 shares he placed those 100 shares. ये 100 शेयर्स को उसने आपका बेसिकली उसके बेसिस पे उसने आपका लिमिट लिया, लिवरेज लिया कितने का? 9x का 9,000 रुपीज, जिसमें उसने आपका ही परचेज मोर 900 शेयर. दैट मीन्स नाउ टोटल शेयर्स आपका कितने हो गए? 900 प्लस 100 आपका 1000 शेयर्स. अब 1000 शेयर्स प्राइस ड्रॉप बाय 5%. ठीक है, सो 1000. अब इसका टोटल पोर्टफोलियो साइज इज 1 लाख. 1 लाख का 5% इज हाउ मच? 1 लाख का 5% इज 5,000 आपका. ठीक है, सो 5,000 ही डायरेक्टली लॉस द 5,000. ठीक है, सो 5,000 आपका इसका नुकसान हो चुका है. ठीक है, हिज लॉस इज 5,000. एक्स कैपिटल erosion is limited to 500 since his original investment. No, this is wrong. Leverage magnified Mr. X losses 50% of initial investment. 10,000 का 50%, 5,000 true आपका. ठीक है, further decline in share can lead to forced liquidations. बिल्कुल. Asset liquidity risk refer to the situation where X won't be able to sell this particular one. ठीक है, market liquidity arise when X cannot sell his holding at fair price or आपका ओवरऑल पार्शियल और फुली लिक्विड. और प्रॉपर रिस्क मैनेजमेंट फ्रेमवर्क जो इसको बचा सकता था. तो 2, 3, 4, 5, 6 ऑप्शन नहीं, ओनली रुक्मणी मैम इज करेक्ट हियर, बाकी की जनता why you are not answering, ठीक है. वेरी नाइस क्वेश्चन आई गेस. अच्छा ओके, अच्छा रुक्मणी मैम मेंशन एस, यस ठीक है. हाँ आई थॉट यू मेंशन ऑप्शन ए आपका. व्हाई नो वन इज आंसर दिस क्वेश्चन गाइस, ऐसा क्यों आंसर क्यों नहीं किया? वेरी सिंपल क्वेश्चन ना. एनी डाउट ऑन दिस वन प्लीज डू लेट मी नो. एवरीथिंग इज गोइंग फाइन ना? सोए तो नहीं ना अभी तक? ऐसा नहीं कि मैं यहाँ लगा हूँ और आप लोग आराम से यू गाइज आर चिलिंग और स्लीपिंग, ऐसा तो नहीं है ना? चलो अगला क्वेश्चन गाइज, नेक्स्ट क्वेश्चन. चलो नेक्स्ट क्वेश्चन गाइज, नेक्स्ट क्वेश्चन. Consider the following scenario for a bank trading portfolio. Determine the type of risk associated with each situation, whether the risk is permissible or mitigated under the regulatory frameworks. Identify the correct one. ठीक है. So bank trading book contain the following exposure June 25. Similar type of question we have done earlier also, but we have different entries. Which of the following is most appropriate mapping of each situation to its associated type of risk? So what will be your right answer guys? This is the easy one, okay? I'm expecting right answer from all of you. Now tell me what will be your correct answer guys? What will be your correct answer? A proprietary position in foreign exchange derivative with high volatiles during political turmoil abroad, which the bank intend to liquidate in one day. So what is the risk involved in this case? आपका market risk, ठीक है? We can consider this particular one as a market risk. The position in mid cap equity shares that are difficult to sell due to poor trading volumes, resulting in significant deviation from the fair market value. So it is आपका what options we have given: asset quality, market. हाँ it we can आपका it is something आपका basically liquidity risk, where you can categorize as asset liquidity. A long hold in OTC interest, over the counter interest rate swap, contained with the counterparty that receive a credit ratings downgraded from double A to आपका double A to triple B. So we have credit risk here. The credit risk, downgrade risk is here. It is also known as downgrade risk. A match principal broking position in government securities, expected to be unwound within 3 days. A matched principal broking position in government securities expected to be unwound within 3 days. So this will be categorized under again the market situation or market risk. This will become under the market risk. A credit default swap contract where the counterparty failed to pay at time of settlement despite having positive mark to market value. So it is आपका, it is known as counterparty risk. ठीक है, counterparty risk आपका, ठीक है, counterparty risk और आपका settlement risk. ठीक है, counterparty और settlement risk. तो what is the sequence आपका? What is the sequence? So we have the right sequence आपका what? Market risk, ठीक है, and then we have asset quality risk, then we have credit risk or credit mitigation risk, then we have market risk again, and we have आपका counterparty risk. So one now अच्छा okay, we have to match these particular one, 2, 3, 4, 5. So the first one only will be right answer for this one, market risk. No, for second they have mentioned liquidity risk. No, market risk, आपका asset quality, right? Then we have third one is आपका credit, correct है. Fourth one is trading liquidity risk and counterparty risk. Market risk, asset liquidity, credit risk. अच्छा ओके हाँ, it should be credit risk आपका, not it should be credit risk, not mitigation risk. The market risk, credit risk, हाँ, this is liquid. No one. Market, अच्छा ओके हाँ, last one is the fine one ना. हाँ, last one D आपका, D should be right answer for this one. Yes, no रुक्मिणी मैम, not B आपका, ठीक है. B और this looks similar, but it is आपका D. See why D? it is market risk आपका, ठीक, and it is credit risk. There is something mentioned here ना, credit mitigation risk is not, ठीक है. Statement 3 आपका, a long held OTC interest rate swap contract which is counterparty just receive a credit rating downgrade from double A to B. So credit risk, it should be आपका credit risk. It is आपका, it is a clear cut credit risk आपका, ठीक है. There is no, like, we are, if it is some sort of derivatives आपका where we have entered to protect some portfolios and all, then we used to say mitigation. Otherwise, like, this is a kind of a one-to-one position with the client, so that's why it is credit. D should be right answer. Yes. So counterparty or settlement risk, and this आपका credit risk. The downgrade in rating, this is spread, reducing the instrument's price. This is credit risk, particularly rating migration risk. ठीक है, it is rating migration risk, not this particular one. ठीक है, तो please go through these particular statement, they'll help you. चलो next one. As we are getting bigger statement, people are getting like, सब लोग सोते जा रहे हैं धीरे धीरे आपका. चलो आगे बढ़ते हैं. Which of the following statement are correct regarding the market risk management framework? Market risk management framework. So market risk management process are primarily designed to enable risk pricing of financial instruments. आपका, ठीक है. This first statement itself doubtful. Market risk managed process are primarily designed to enable price risk. No, it is not for the risk pricing. Yeah, it is for the management. आपका, ठीक है, this is wrong. An effective market risk management framework include risk identification, limit setting, and risk monitoring and reporting. True. Financial instruments are subject to market risk because their value depend on M2M. बिल्कुल सही. 2 and 3. 2 and 3 means B will be right answer for this particular one. Correct है. चलो आगे बढ़ते हैं. Which of the following statement regarding the original structure of market risk management in banks are correct? So, organizational structure for market risk management in bank are correct. That means board of directors, risk management committee, market risk management committee, आपका departments and all. ठीक है, so that is around this particular one. So what will be your correct answer, guys? ALM support group is primarily responsible for product pricing and protecting net interest margin. ठीक है, पहले तो ये आपका यहाँ होना ही नहीं चाहिए था, बट है भी तो ये आपका ALM is ALM support group. First it should be part of credit and it should be आपका ELCO. ठीक है, not this आपका ALM support group. The risk management committee is responsible for setting prudential limit and ensuring the robustness of risk measurement model. ठीक है, so statement 2 is right. The next one is the middle office operate under the direct control of the treasury and assist with executing structure of product deals and all. Wrong. ठीक है, so middle office, basically it is for the risk management. The ELCO is responsible for articulating the bank interest rate view and managing the maturity profile of the asset liabilities too. The board of directors set aggregate risk limit and responsible for approving risk management policies. So 2, 4, 5. 2, 4, 5 means option A will be right answer for this one. So product pricing and protecting NIM fall under ELCO. ठीक है, asset liability committee, not under the your आपका risk management आपका support groups. Next one, which of the following statement correctly reflect the principle of risk identification in market risk? So risk identification, the very first principle, and you have to find out the correct statement. ठीक है, बताओ जरा. So standard product operate within product programs that outline our procedures, limit and control, including market risk measurement at both individual and portfolio level. The new or non-standard product, we have discussed standard and non-standard. Huh? I hope you remember. Okay. So non-standards means new product. We are like ये बिल्कुल एकदम fresh product हैं. We do not know the exactness. We do not have the experiences with them. So we generally develop the product program for them, okay, after having some experience. So these are the old products which we are dealing with from past आपका, ठीक है. So temporarily operate under product transactions memorandum until a full product program is formalized. Okay. Risk taking decision at the transaction level are made independently of the corporate levels to encourage product level innovations. This is right or wrong? ठीक है. This third statement looking wrong आपका ना. It should be आपका मतलब like we generally take these particular decision at आपका organization level, transaction and portfolio level. ठीक है. I will not go with this one. 1 and 2 should be yes हाँ. Those who are marking option A, yes हाँ. बिल्कुल option A should be right answer for this one. So risk taking at transaction level must align with the corporate level guidelines. Independent decision making at the transaction level is not encouraged as it could lead to uncontrolled risk exposures and all. Okay, next one. Which of the following statement are correct in relation to downside risk, take a downside potential risk and VAR, and methods used to calculate VAR. Okay? So methods used to calculate VAR, that Monte Carlo is should be part of this particular one. Okay? Historical simulation, correlation, the other one. Okay? All the three methods are mentioned here. चलो बताओ क्या होगा करेक्ट आंसर गाइस. हाँ बहुत अच्छा क्वेश्चन है गाइस, वेरी गुड. ट्राई क्रिस सर, रुकमणी मैम, अहिल्या मैम, प्लीज ट्राई दिस वन. वेरी नाइस क्वेश्चन. ठीक है, ट्राई टू आंसर दिस वन. So downside risk is referred in financial risk management because it consider the both potential for profit and losses. ठीक है, downside potential both आपका both potential downside and upside. ठीक है, one day VAR of 10 crores at 99% confidence level means that the daily loss will exceed 10 crores exactly once in every 100 days. One day VAR of 10 crore at 99% confidence level means that the daily loss will exceed 10 crore exactly once in every 100 days. What do you say about this particular one? It should be like आपका 1 out of 100 days ना. ठीक है, so what does it means? 199% confidence level means there is 1% of probability. ठीक है, so 1 out of 100 days it should be. ठीक है, I'll not go with this particular one. Downside risk preferred only आपका downside losses, not this profit. ठीक है, when it comes to the downside potential, it does not consider the upside. It only consider the downside one, and it should be 1 out of 100 days. The correlation methods, the first method of VAR, use a variance covariance matrix and require assumption about the volatilities and correlation across risk factors. True. Historical simulation methods does not assume any method or correlation structure. True, but may fail to capture future behavior of historical pattern different significantly. Monte Carlo simulation methods is based on generating thousands of random price scenarios like 10% upper side, 2% downside, 10% downside, 20% upper side, and require modeler to make assumptions about the volatility and correlation. True. Okay, so 3, 4, 5. Okay, 3, 4, 5. C should be right answer for this particular one. Yes, Ashok sir, very good. Very confident also. Very good. Awesome. Okay. So C should be right answer for this one. So I'll first check the statement too. 1 day VAR of 10 crores at 99% confidence level means 1 out of 100 days of like that is 2.5 times per years. The loss may exceed 10 crores. Okay, not it will आपका exactly 100 days or that one. Okay, so that is the one. Okay, we have discussed this particular one also. Downside risk ignore profit potential, it only account the loss probabilities and all. Okay, so that's why option C is the right answer for this one. Next one,